Hey everybody, this is Matt at TradingParadigm.com, and today I want to discuss profile trading. And there are two main profiling tools, volume profile and market profile. These are similar tools because they both build out distribution curves to graphically display market generated information, but they are different. Volume profile is a representation of volume or market participation at price, and market profile is a representation of time or opportunity at price. There's quite a bit of correlation and interconnection between the two because typically the more time a market spends at certain prices, the more shares or contracts will be traded at those prices. And you'll often hear people use the terms volume profile and market profile interchangeably, but they are not exactly the same. They are, however, both professional grade trading tools that the average trader has little to no awareness or understanding of. So this video is meant to shed light on how powerful profiling tools are. I feel like I'm constantly repeating this, but I don't want to downplay the message. In my experience, trading without volume and market profile, or at least one out of the two, is like trading blind. First, we'll dig deeper into volume profile. As I just mentioned, volume profile tracks volume or participation at specific prices. This basic explanation doesn't really sound earth-shattering, but the way volume profile displays critical market-generated information simply can't be seen through any other tool. For example, the conventional way that the average trader views volume is at the bottom of their chart down on the x-axis on a bar-by-bar basis. This provides meaningful information, don't get me wrong, but volume profile uncovers a whole new dimension by displaying a distribution curve on the y-axis. This brings a level of clarity to market participation at specific levels that many traders fail to recognize. It's like a behind-the-scenes look at how market participants are behaving at the purest level, and it exemplifies how deceiving price can often be. Which is why I don't personally like to put my trust into surface level candlestick patterns, indicators, and all sorts of other technical analysis that people want to believe is helpful. I have limited to no faith in these things on their own. But volume profile, especially composite volume profiles, displaying weekly, monthly, quarterly, and yearly participation, are like my North Star. Every action I take in the market is dictated by this authentic, transparent view of market participation and behavior. Then there's market profile, which tracks opportunity at price in 30-minute increments using TPOs or time price opportunities. Without any exposure to market profile, this probably sounds confusing, but it's really not all that complicated. Of course, it takes time and experience to learn all the nuances and be able to trade effectively using a tool like this, but understanding the basics of how a market profile distribution is formed is fairly straightforward. If we look at the image here, we can see the general structure. Each 30-minute increment of the session is assigned a letter. The first 30 minutes is A period, the second 30 minutes is B period, and so on. And these letters plot the price range or opportunity during each period. And when you collapse it down, as you can see on the left, it produces a distribution curve, similar to that of a volume profile. I think a lot of developing traders get intimidated by market profile because they don't immediately understand it or don't want to bother finding a trading platform that actually provides it, but I highly suggest overcoming this initial fear and slightly longer learning curve to give it a real chance. Just like volume profile, market profile offers some unique and powerful views of market behavior that no conventional forms of technical analysis can match. In my opinion, no better tools exist for tracking and analyzing the market auction process. So the classic question, which one is better or more effective? If I had to pick one, it would be volume profile. It's more versatile in terms of composite profiles, and I think volume is a more important measure of the auction than time. But I don't like to think of it as a one over the other situation. I use both, and in many cases, it just comes down to personal preference of the trader. But at this point, I honestly couldn't imagine trading without profiling. It seriously makes me cringe to think about the old ways I used to trade and the surface level patterns and indicators I put my trust in. Volume and market profile have been complete game changers for me. This was a critical missing piece to the puzzle, and I know that learning how to properly utilize these tools will have a dramatic impact on many others. You can find this article and a lot more helpful resources related to profile trading down in the description, and I'll talk to you in the next video. Take care.